Alright guys, welcome to my first non-recap video. We're going to be going over basic questions regarding day trading, specifically for futures, as that is what I trade. Futures is not for, I want to start off by saying futures is not for everyone. It's all personal preference. You have futures, options, forex, stocks. There's many different things you can trade. I've just found confidence in futures, and that's what I like. So that's what I'm going to be going over today. If you want to get into some of those other ones, later in the video, I will show you a Discord you can join. I know a lot of people trade options in there. And if you want to trade forex or stocks, there's other places to do that. You're not going to learn a ton about that here, but there's definitely people you can learn that from. But let's get right into it. Some common terminology to start off. We're going to start off with the stop loss and the take profit. These are very important aspects to day trading. The stop loss is just a way to stop you from losing more profits. You don't want to emotionally stay in a trade for longer than you have to, and say you think you're going to lose 200, but then you stay into it and you actually lose 600. That's going to ruin your whole trading day, all of that. It's also a great way to define your risk. So if I have a 10-point stop with one mini on NQ, and we'll get into mini and NQ and all that in a second, that's $200. If I have my stop at 20 points, that's now $400. So it's a great way to do that. Take profit is just where you're going to take your profits. And I can show you these real quick on TradingView. So if I was in a long position, I think that NQ is going to go up. I would place this kind of trade. And this would be my stop right here. So I would say that if I think the price is going to come up here, move its way up, and I enter here, I think it's going to get up to here. If it gets up to here, it's gonna automatically exit me out of the trade, and I'm gonna make however much money that is. But if it comes down to here, it's gonna automatically take me out, and I'm gonna lose however much money I had risked there. Now the same way going short, just the opposite. If it comes down to here, I'm gonna make money. If it comes up to here, I'm gonna lose money. It's just automatic ways to get you out of trades once you're in them. Next is slippage. This does not happen very often. It usually happens with stop and limit orders, which we'll go over later. It's just when price is moving so fast into your entry that you actually get entered at a different spot than you thought you were going to. This can cause your stop to be bigger than you thought it was. This can cause a lot of things. So you have to be careful. You have to know when this happens and stuff like that. The EMA. The EMA is the one indicator that I use when I trade. You'll see it in all my other videos. It's the white line. It is how do I want to explain it? It calculates you can see it right here. It calculates the last 8 candles with an emphasis on the recent candles. So it's just a way to kind of see the trend. It's a good thing to trade off of sometimes. I use it to trade off of stuff like that. The next thing that we're going to go over here is liquidity, supply and demand, and time frame. We'll go over all of those at the same time. So if we come back here, liquidity is not something that I generally use in my trading, but it's good to know. So like right here is a good example. You can see we had liquidity resting up here. Now, what happens here is all the people who think that the stock is going to go down set their stop losses right here. And what happens is the market comes back up and uses them as liquidity to push them back down. It's not super important, so I'm not going to go too much in depth. If you want to learn more about liquidity, I would recommend actually watching TJR. He does a great video on liquidity. But we're going to get into supply and demand. So supply and demand is another thing. You can see, let's see, like right here is a good example. You can see that after we got to here, we pushed up and created a big move up. And then once you see, we come back into it, tap into it, and we push up once again. The same way can be said about moves going down. I don't have a good example of it. I guess right here would not be a bad one. You can see we tapped into here, we moved down, and we moved down once again after we tapped into it. Now, what you can do is you can extend these past, and you can see that once it gets broken, we actually create big moves up sometimes. Not always. Again, none of these things are perfect, but that's just kind of how it works. Now, the time frame is all this up here. So I like to trade on the 15-second. This is the 1 minute. A lot of people use 5, 15-minute, 3-minute, 2-minute. It just refers to each of these candles right now. Since we are on the 1 minute, each of these candles is 1 minute. So this candle right here is from 11:22 to 11:23. Now if we switch to the 5 minute, each of these candles is worth 5 minutes. So you can see it's the same thing, just more condensed. So you can see it's the same movement, just more condensed. So each of these is 5 minutes. So this is from 10:20 to 10:25. It's important because you'll hear people saying that all the time, what time frame they're on. All right, let's go back to the slideshow. Now, demo trading. Demo trading is a very important step in the trading process. What is demo trading? Demo trading is like a practice account. You trade with fake money. Now, funded accounts, which we are going to get into later, are also demo accounts, but this is different than a funded account. This means that no matter what happens, you're not going to make any money off of it. You're not going to lose any money off of it. It's all fake money. It's just a thing that you should do to practice your strategy, practice entering and exiting trades, refine your strategy, all of that without actually losing any money, because you will lose money at the beginning. How long should you demo trade for? I think the longer the better. I was on and off demo trading for 3 years before I'm finally on a past account on a funded. It saves you money in the long term, and it helps you define a strategy. I think demo trading is the most important part of a trader's journey. How much money do you need to start? This is a big question asked by a lot of people. I see this question asked all the time. Futures trading has become very easy to start with a small amount of capital or money. Funded accounts have made the ease of access into this industry much easier. It's very easy. You can go to Top Step and buy a funded account for $50. You can go to My Funded Futures. You can buy an account for $80. Only a few $100s at most is needed to get into this industry. You're probably not going to pass your first funded account. You're going to have to buy a few of them. So let's say you have to go through I went through, in my 3 years, I think I went through 2 or 3 failed funded accounts, and then finally my winning funded account that I'm on right now. So let's just say 4. And let's say I spent $100 on each of them, which I did not. It was less than that. That's $400 max that I spent. It's just the number of funded accounts that you need to buy. I would recommend this should not be a full-time thing. Until you are you'll know when it's not. It's not a full-time thing for me. You'll know. But you need a few $100s for the trading aspect, plus whatever you need to live out your actual life. What are prop firms? What are funded accounts? Prop firms allow you to access a large amount of capital. Now, I want to emphasize it's not real money. There are 25K accounts, 50K accounts. I've seen all the way up to 400K accounts. It does not mean that when you pass them, you get $400,000 that you can just withdraw. It is all fake money. Unless they offer you a live account, which you still will not be able to just withdraw all the funds from, it's not real money. They pay you out of their pocket from people that pay for funded accounts. But what this does is it makes leveraging trades much easier. Think about 1% on 3 different accounts here. Let's say you have $1,000 and you open your own live account. 1% on that account is $10. I don't know if that's right. That doesn't sound right. Yeah, $10. That's not very much. If you make 1% a day, that's not very much. Now on a 50K account like I have, that's $500. That's a lot more than $10. Now if you have a 400, let's say you have three 150K accounts and you make 1% on all of them through copy trading. Copy trading means that you can place one trade on one account and it'll go to all of your accounts. That's 4,500. So if you aim for 1% a day and you have a 1K account, that's $10 a day. But if you have this 450K, that's almost 5 grand a day. That's why I always recommend that people calculate their strategies when they do their statistics on their strategy. Do not do it in dollar P&L. You should do it in points, in percentages, something like that that you can easily convert to different levels of accounts. Because your strategy might not be bad, it could just be a capital issue. And that's why prop firms are making it so much easier for day traders to trade nowadays. Now, you hear me talking about points. What are points? Points refer to the change of price in a contract. So what that means is that if my if NQ goes from, let's say, 20,000 to 20,010, that is 10 points. Now on N, so that does not mean that I made $10. It means that it changed $1 for 1 point. So in that case, it went up $10. But also you need to know what ticks are. So 1 point is equal to 4 ticks. So you'll see me talking about when I place my trades on TradingView, just like this right here, you'll see I have 80 ticks right here and 40 ticks. This is 10 points, this is 20 points. It's not 80 points and 40 points. It's different. But you can see I have it set to 80 and 40, 20 points, and 10 points. So there's a difference between ticks and points, and you should be aware of that. And this is how you will measure your profit and losses in trades. So on NQ, 1 point is $20. I think on ES, 1 point is $50. Those are the two main ones. So this is how you will measure your risk, your profits, all of that. Now, minis versus micros. This is how you size into trades. 1 mini is equal to 10 micros. Like I said, this is how you manage your positions. So, like I said before, 1 mini for 1 point on NQ is $20. But if you went in with 1 micro for 1 point on NQ, that'd only be $2. So say you have a really big stop loss, 40-point stop loss, let's say, and you go in with 5 micros. That's $400. If you went in with 1 mini, that would be $800. So you can change position sizing, your number of contracts, minis, micros, all that, based on your stop loss to reduce or increase risk. So you want to have the same risk every trade most of the time, or about the same risk. So, but you don't want to compromise your trading style based on how many contracts you're using. So you don't want to say, oh, I'm using 1 mini, so I can't put my stop loss at 20 points. I'm only going to put it at 10, but then get stopped out because you didn't follow your strategy's rules. So this is just a way to manage your risk. Some recommended applications. TradingView. That's what I've been showing you this whole video. It's great for charting, and you can use it to place trades. I use it to place some of my trades, but not all of them. I mostly use Tradeovate, which is what you mostly trade on using a prop firm. The reason I use Tradeovate instead of TradingView is, one, I feel like the data updates more quickly on Tradeovate, so it's much easier to see where buyers and sellers are coming in. 2, it gives me, once I buy the funded account, it gives me free access to the 15-second chart, which on TradingView costs like $90 a month to get. But I use both TradingView and Tradeovate at the same time when I can. Obviously, if I'm on a laptop, I don't do that. I have them both up, but I have to switch between them on my computer. I have them both up on different screens so I can see them both at the same time. Now, forexfactory.com, we'll get into this real quick. That's the news. So you have red folders, which affect the market very much. You have yellow folders, and you have orange folders. So it goes red, orange, yellow, and then gray is the significance of the news. Forex Factory puts it up very nicely. You can change the time zone, all of that. So it's just a very nice way of figuring out when news is and all of that. Yeah, so those are the three main, and obviously Discord is another one for getting to know people, learning, all of that. Now, limit versus stop order. This is a very big thing here. I use stop orders. I don't usually use limit orders. What a stop order means is that if price is below where you want to enter, you're going to enter a stop order. So then once price gets up to here, once it gets to here, you're going to enter buys. But if I had a limit order and price was down here, it would mean that I would come up and it would enter sells. So if you're going to, so you can see they have limit, stop, and then market. There is market too. Um, I don't know why it has this box here. That must be for spread or something. Market means you're just going to enter wherever price is right now. Limit means that, again, if you're entering sells, price is below you. If you're entering buys, price is above you. Stop is what I use. Stop means that you are going to, if price is below you, you're entering buys. If price is above you, you're entering sells. So make sure you know which kind of trade you're getting yourself into. But yeah, so you can see, like today, this was my stop order from today. So I said price was above me, so I entered a stop order. And then once price got to here, I got entered, and then obviously my take profit got hit. Now, if I would have entered a limit up here, it would have just entered me right where it was. So you need to make sure that you know what you're getting yourself into before you place the trades so that you don't get filled where you don't want to get filled. This is a very important topic, and if you need more clarification, I recommend you watch more YouTubes on limit versus stop order. Now, how should I start day trading? Join a community of traders. I recommend Steph Trades Discord. It's free. I'll put the link in this bio. He does have a free access section of the Discord. So you get tons of stuff. I will show it to you just in a second. Let me pull it up. So, as you can see, he has plenty of free stuff in here. You can see all the people that are banking today with him. Plenty of people. He has all of this information for free. Now, if you want the full access, it includes a lot more information, plus live trading and seminars. I recommend it. If you want to join it, I recommend you join the free access first. Get all the information there. If you really like it, I recommend DMing either me, Steph, Booleus, anybody that's at the top of the Discord, and there's a good chance that they'll give you a discount on it. If not, I think it's totally worth the $74 a month. As I just showed you, people are making that daily in the Discord. But it's a great place. There's 3 great traders that live trade every day. You have Steph, you have Habibi, and you have Tells. They're all great traders. They will teach you a lot. They've taught me a ton in the past month. And I think it's a great place to start. And obviously there's free access. So there's no reason not to join. After that, I suggest you start developing a strategy. So you can watch my videos, watch Steph's videos, watch other people's videos, ask questions in the Discord, develop your own strategy though. Pick something that works for you. I've tried, I don't even know how many strategies over the past 3 years, and nothing clicked like it has in the past month for me with this strategy. And this just clicked, and I've just been banking ever since. Now, at the same time as you're developing your strategy, you should start to demo trade. Demo trading helps you make sure that you're entering in the right moments during your strategy. It helps you refine your strategy. It helps you get a feel for the actual trading. Now, demo trading is not going to be like live trading or funded trading because there's no emotions to it. There's not any losing of money, winning of money. That's why you need to be really confident in your abilities and confident in your mental state to be able to trade without your emotions when you move into that live trading. Now, the last thing that I'm going to end this video with, how to become a millionaire. This was the only question that I had asked before this video, so I had to put it in here. It's possible. You just have to start. You're never going to become profitable if you do not start. Now, those small wins turn into big wins over time. Like I said, the leveraging. $500 a day turns into $120K a year. That's a lot of money. I know it might not seem like a lot because you see people making thousands and thousands of dollars a day. But you can turn this $500 a day with more contracts and copy trading. Let's say you had 2 minis and 2 accounts. Now you're at $480K a year. Let's say you have 3 minis and 3 accounts. Over $1 million a year. It takes time though. Like, you're not gonna make $500 consistently every day right away. Like I said, I've been trading for 3 years. Steph has been trading for 4 or 5 years now. Like, it takes a lot of time. It's not a sprint, it's a marathon. But that's all that I have for this video today. I'm gonna post this link in the bio. It's just gonna ask you if you have any other questions. If you have any other questions, please fill it out because I will answer them in another frequently asked questions video. But for now, that's it. I hope you guys learned a lot, and I hope you guys, make it in your day trading. I hope you guys are enjoying all the videos. But yeah, that's it for today. I will see you guys on Monday.